If you're a residential real estate agent earning $200,000 a year and you want to grow your passive income, this show's for you. Learn the secrets other agents use and hear from experts in our field in order to guide you along your journey to investing in assets like apartment communities so that you can turn your commissions into cash flow. I'm Randall McLeod. Let's go, baby. Hello, and welcome back. I am going to talk to you today about SVB. If you haven't heard about it, it is the big story, I guess, all across venture capital and funds and startups and real estate now may be affected. So SVB is the bank out in Silicone Valley Bank. And over the weekend or Friday, I guess, they were put into receivership. And so people couldn't withdraw their funds. Companies couldn't withdraw their funds, couldn't make payroll, and couldn't just transact business. So there's a big fear over the weekend that some of these companies would go out of business very quickly if they couldn't hit payroll, how they were going to handle laying off or furloughing any of the employees. And so it was classic run on the bank, people going to withdraw as much money from that bank as they possibly could. And the government stepped in and they fully insured all the deposits, and everybody is going to be safe. All the depositors are going to be safe. And I'm sure they've been able to withdraw their funds. So how this relates to commercial real estate, one of the issues, obviously, looking at the banking sector, thinking that everything was fine and going forward, no depositors really have the insight into these banks to see what their balance sheets look like in order to determine if the bank is making risky bets. Silicon Valley, the whole idea is that they're buying bonds that have long-term maturities, and yet they were investing the depositors' dollars into these startups that have long-term returns on them. So maybe I said that wrong. They're taking the dollars and investing in these long-term startups, or loaning money to these startups that have a long-term payout with deposits that are very short-term types of transactions. So they need to be able to take out their money, and they can at any time. Yet they have so many commitments outstanding that they were unable to fulfill all the withdrawal requests. So that's what happened with the bank. It went into receivership. We're proud to be sponsored by Ridgeline Investment Group. Ridgeline has a track record of transacting more than $53 million in assets throughout Texas. Ridgeline is currently looking to acquire 100 to 200 unit Class B multifamily communities between 5 and 20 million in San Antonio, Temple, Waco, Tyler, and other Texas secondary markets. To learn more about Ridgeline Investment Group, visit www.ridgelineig.com. And so in the commercial real estate space, we've seen a string of defaults now. So there's an office landlord controlled by Pacific Investment Management Company. They have a $1.7 billion loan that is in default. And so there's also default by Brookfield Corp, BN, on loans tied to 2 LA office towers. And there's also a San Francisco complex. It's co-owned by former President Donald Trump and Bernardo Realty Trust. That's also at risk of default. So these are large loans, large portfolios that are at risk of default. So that is currently happening in the real estate space. And so the issue, I guess, that's concerning when one bank is faltering and there is, I guess, a risk of a recession triggered by these bank defaults, that could lead to the real estate market having more trouble ahead, right? And so one stat to keep in mind is that some of these regional banks and some of these smaller banks, since mid-2021, they put more and more commercial real estate on their books. So let's see, lenders' books, they shot up over 16%, or $725 billion, to a record $5.31 trillion. Right. And that's according to the Federal Reserve. So again, that is a larger portion of their book of business. And there's a risk of a recession, continued risk of recession, that puts more and more of those banks at risk and more of the commercial real estate market at risk. So the good news is that lenders, they've tightened their actual lending standards, their credit standards. And based on a recent survey from the Fed, 57.6% of those lenders reported tightening in the most recent Fed survey. So standards, again, that it's all well and good, but does it still put us at risk, right? It's just something to keep in mind, something to keep top of mind. What I feel is that now is actually a really good time to be raising capital and to be having money ready to go on the sidelines for any transaction and any change in the marketplace. Because it's just with everything that's going on, but there will be opportunity to transact deals at a low basis that makes sense, like we haven't seen in years and years. And so that's really the takeaway from this. It is start building the war chest now so that you have the ability to go and deploy these. That's what we're working on. If you are interested in learning more about the fund that we're creating, by all means, reach out to me. It's rm@ridgelineig.com. You can reach me direct right there and learn more about what we're doing and how we're going to raise capital into this environment so that we can actually deploy it into multiple assets that are going to be more profitable and in a better position than the current market is showing. So anyway, I'll leave it at that. I appreciate you jumping on this episode, learning about the banking issues that we're facing right now in the market. Obviously, reach out to me with any questions. Happy to have any conversation with you guys. And I'll catch you on the next episode. Bye-bye.
Did you know that 80% of the agents we speak with got into real estate in order to gain passive income so they could obtain financial freedom and become work optional? If you want to stay up to date, the best way is to make sure you're subscribed. So if you haven't done that, go ahead and do it now. We'll catch you on the next episode.